Today's Friday and I'm going to make a quick trade breakdown from basically yesterday's trade. I was not able to record it, just did not find the right time, but yeah, doing it right now. So yeah, have to scroll back. So that's the trade basically I took yesterday. In my opinion, a really clean 10 macro market maker sell model in that case, back to New York open kill zone assess liquidity. We took lots of partials. Unfortunately, can't show you because basically the executions get resetted with the next day, but I think you saw the execution video. So took, I think, 3 partials in here, got stopped right here, shorted 4 contracts. Yes, super clean trade actually. I think how I managed the trade was perfectly actually regarding money management. So I took my first partial, I think, approaching the midnight opening price, also the engineered says liquidity right here, and basically took one off right here as well. And after I think we closed above C of the order block right here, and also NQ was not a line, not NQ, yeah, basically ES was not a line. ES was already trading higher, and therefore I took yeah, one more partial right here. Took my stop to break even. Basically what I wanted to see is that because if we measure basically the price range from low to high, we can see we have CE right here, and when we go a bit back we see that we have a really clean fair gap right here. And if we form basically a fair gap, I want to see that we have right here basically a breakaway gap, and actually the breakaway gap yeah, really got respected. Why? Because as you can see right here, we have no bodies in the upper half of the breakaway gap, bodies staying in the lower half, also CE right here respecting consequent encroachment right here as well. Still, as you know, the wicks do the damage, and I got stopped with this wick right here. Would have been, yeah, really clean and beautiful trade if we just not had got stopped right here, and we would have really got our last yeah, partial down here at the extra assess liquidity. We've also first presented fair gap right here, so yeah, was a reasonable area to basically retrace from. But I mean, that's just it. The perfect entry, as you know, would have been inside the balanced price range right here after we close below it. Why? Because that's the last fair gap, which takes out basically engineered size liquidity. We trade into a CE of the high time frame, and from there we approach the 10 macro and displaced lower, and therefore yeah, in that case it's a perfect yeah, indication to go short in here. So super clean entry would have been right here. I was not able to participate in here once because I wanted to be a bit more patient. To me it looked really difficult. Why? Because we yeah, kind of already swept assess liquidity on the 5-minute chart. So as you see right here, all bodies are staying basically in the upper half, and therefore with 930 coming lower, basically sweeping this assess liquidity below the lows, below the bodies, not the lows, below the bodies, we are able to trade higher, and that's basically the fake really higher. And therefore we know, okay, if we are going to see once more a move to the downside, that's right here, the low right here, which formed at 930 is engineered size liquidity. So therefore I want to take a partial right here. But yeah, that's basically why a short market maker buy model was also kind of in play. I mean, you could have already shorted right here after we inverse the fair gap, because we just swapped London highs, we swapped New York open kill zone buys liquidity, traded higher into the high time frame gap. We could have already shorted right here. What I did not like about the trade is the fact that we are really early. And also that we have this huge inefficient wick to the upside, so that's really indicating that we will revisit the price range right there. But I mean, you could have shorted already there. I mean, yeah, it's a bit too early in my opinion, because it's before the 10 macro. Still, if you would have shorted right here, you just need to be really aggressive. So entry probably right here after the close below the inversion gap, and then take your first partial basically at the midnight opening price, go break even, get stopped, and you're done for the day. I mean, it's possible. I think it's better to wait, to be a bit more patient, because then probably as you see, the best setup, the better setup occurred right here with our 10 macro. Once again, 10 macro only what you need. Super high quality time window, in my opinion, and delivers basically all the time, every day. It's really insane. But yeah, that's the trade. So 126 RR basically, not being able to take every partial down here, but yeah, that's basically it. So let's talk about the higher time frame. Yeah, high time frame objective. So as you know, yeah, it's a bit difficult. Why? Maybe let's start at the daily chart. So don't get confused. The candle right here, that's today's trading day. Yesterday I took the trade, and the day before we really rallied higher, so on Wednesday. I think that was actually to be expected. I mean, yeah, we don't know really what Trump is going to announce, if he's going to attack. I don't know. I don't want to say too much about it, but just the Middle East conditions. But what we know is that we closed above C of the order block, so our price action is actually already indicating what's going to happen, and I think that's quite interesting. So we already saw that we are going to trade higher. Such a respected basically see right here, traded a bit lower, but we really closed strongly above it, and then from there we know, okay, we are really bullish, we are going to expand higher now quickly. That's what happened, really just aggressive moves to the upside. I mean, yeah, 2.63%, or even more, I don't know. I think that's insane. I don't really like what he's doing right there. So that's, to me, market manipulation, but yeah, I don't know. With that, we can go to a 50-minute chart, or maybe let's start with hourly chart. So yeah, we are really holding basically strongly within the inside the hourly favor gap right here, not trading below it. And what we basically saw, or what we traded in that case, we are really trading lower. And if we want to see that we are basically still damage on the SSL liquidity, we need to see first basically to do damage or GC manipulation to the upside. So that's basically perfect with our opening. Always, if we want to look for longs, we want to see that 930 manipulates lower, and if we want to look for shorts, we want to see that 930 manipulates higher. So just doing basically the inverse. And yeah, I think perfect example right here. So 930 opened right here, traded higher, swept by the liquidity. We already did damage before, we already traded before the opening higher, but that can also be regarded as manipulation higher. Sweeping London highs, New York open kills on buy the liquidity, also the high time frame buy the liquidity right here. And also we had lots of SMT being in play with, I think, the Dow Jones, and therefore to look for shorts right here was really perfect. Why? Because even if we are bullish, we need a short-term retracement to basically have a market maker buy model being in play. That's what we did right here, and then from there we rallied higher. And if we are bearish, if we want to see that we are going to expand lower into the inefficiencies down here, then we are also going to see a market maker sell model. So yeah, in that case, really clean trade aligned with the higher time frame. Hourly is not looking clean, I have to admit. So huge wick to the upside, huge wick to the downside. Basically, the huge wick right here already indicates that we are going to see later prices to the upside. So, but yeah, that's basically it. So I think the trade idea is clear. We want to go short against the 930 manipulation, basically higher. Today was a bit different. So why? Because yeah, 930 already traded higher right here, scrap buys the liquidity, and therefore the short right here is possible. But it's before our time macro. We only engineered as a liquidity. We have the inefficient wick to the upside on a 5-minute chart. Therefore, we know we will revisit the balanced prices, right? The price ranges right here. And therefore, we want to be a bit more patient. We see once more I move to the upside, engineer buys the liquidity right here. Why? Because we stopped right in advance of the CE level, traded lower, and from there, yeah, really sold off. Perfect entry right here. Market maker sell model, balanced price range. That's basically your random model, I think, in that case as well. And yeah, from there and sold off, entered right here below the inversion favor gap, and yeah, partials, you know. Actually traded this trade on a Apex funded account, 50k account. Why? Because I actually realized if I'm not able to trade my live funded account, I'm not going to have live market data. And actually, I don't know, I really completely forgot about it. But yeah, to trade only with delayed market data is not what I want to do. So therefore, kind of was a bit, yeah, I don't know, a bit was forced basically to yeah trade the evaluation account. But I'm content with that. I mean, yeah, quite clean trade. Quick glance basically also on regular trading hours, but today nothing special. Yeah, huge gap from Wednesday, as you know. I mean, that was before the opening, insane. 800 handles. Yeah, that's insane. So to me, that's, I don't know if somebody should do something like that. But yeah, today no new open range gap we are interested in. 6 handles, something like that. Too small. But yeah, in that case, we have also regular trading hours, sell liquidity, but yeah, not really anything important in here, I think. So yeah, the upper quadrant level is important of Wednesday's new open range gap, which is right here. But I mean, yeah, we are not really respecting the levels. So I think, yeah, that's basically it. Hope you enjoyed the breakdown. Hope you learned something new. Yeah, we will see how we trade today. I don't know. I've not looked into the charts right now. So yeah, see you soon, and hope you enjoyed the breakdown.